Kenny and I were visiting our property in Atlanta when we got a message from an Instagram troll. This troll, single family flippin' dude, claimed that single family was a better investment than multifamily, but it's just not that simple. So in this video, we're comparing single family and multifamily, and we're gonna prove this troll wrong. Also stick around to find out who this guy is.
Some people prefer and actually think that single family is the better investment. Maybe it's easier to get into, it's more affordable to purchase and flip houses. Others, of course, think multifamily is the better investment, whether that's because profitability is potentially greater, the scalability of it.
But first, we need to provide some context. What exactly is a single family property, and what is a multifamily property?
For the purposes of this video, single family is really just one house, and then multifamily is 5+ units.
Now that we've got that settled, let's move on. Single family and multifamily have different risks and potential for profit. And even though we started in the single family real estate space, we knew that multifamily had a lot of potential.
With multifamily, you have the ability of making $1 million plus, depending on how big the complex you're buying is. But with single family, more times than not, you're not going to make $1 million profit. Before you do your first multifamily real estate deal, you have to learn how. The first course that we invested in helped jumpstart our journey to 1,000 units. It's called the Apartment Investors Club. Go ahead and check it out with the link below. It's our affiliate link.
When we first started, we assumed that multifamily real estate grew in value over time the same way single family properties do, but we were wrong.
Let's say you buy a house at $200,000. Let's say it doubled in price over 2 years. Then it's worth $400,000. You still haven't made $1 million, but with multifamily, you can double the value in 2 to 4 years, usually 5 years. So the scalability allows you to grow or have more profit when you're selling. I know investors that have bought multifamily properties, 100+ units, so large multifamily, at $10 million, and within 18 to 24 months, they sold it for $20 million. That's a $10 million profit in a span of 2 years.
Where multifamily does prove superior is how it is able to mitigate the impact of a vacant unit. Despite what you might think, it's less risky to have more residents at a property than to just have one.
So whenever you have 5+ units, one resident moves out, you still have 4 other units at least paying rent. That way you can cover your mortgage. With single family, you have one house, and that means that if that person leaves or just doesn't pay, then you have to come out of pocket on all expenses, including the mortgage.
Take that, single family flipping dude.
And guys, if you hear all that background, that's our contractors working right now. They're prepping for paint on this whole complex.
Another factor we didn't consider as single family investors is the property management and maintenance. We definitely aren't Bob the Builder types, so tenants, toilets, and termites wasn't something we wanted to deal with. Multifamily investors, for the most part, don't have to worry about this.
Whenever you have a larger property, it produces more income and can therefore withstand more expenses. So you're able to hire maintenance guys, maintenance supervisors, assistant managers, and property managers that will help run your property more efficiently and smoothly. With single family, obviously you don't have people that are on site and work on site.
But we aren't saying that single-family investing is a bad idea. For one, single-family investors still benefit from the many advantages real estate has to offer, especially when it comes to alternatives like crypto or stocks.
These are tangible things. You can actually go out, touch them, feel them. People are living in them. Whenever you buy properties, you're renting these out, so you're getting passive income usually as long as you buy them right. Also, real estate markets are more stable than, for example, stocks or crypto. Prices don't just shoot down or up in one day.
And it's also worth noting that multifamily and single-family property values are determined in 2 distinctly different ways.
You see that house? So if there's a similar square footage property, similar style of renovation, that sets the market in this neighborhood. Meaning that the neighbor, if they do the same renovation and it's the same square footage, they can sell their house usually for the same price. Multifamily is evaluated on how much income it produces, and there's also a thing called the cap rate. Cap rate is just how much % return you'd get if you were to buy it cash. Usually we're leveraging these properties with debt, but basically if you can increase the revenue, you're usually increasing the property's overall value. So it doesn't depend on what your neighbor sold their property for. It's more about the income the property is generating.
If we're being honest, there are some benefits to investing in houses that you won't find in multifamily.
Lower barrier to entry, meaning like these houses are cheaper. Although you might be able to buy multi-million-dollar houses, you can get houses for $70,000 to $200,000. So easier to enter. Second off, easier to finance. One person can go out depending on their income and they can get financing. Some people can even get financing with 3% down, so it requires less to put down and it's easier to get these kinds of loans. Third, it's easier to sell these properties. You can list your property and usually within 30 to 45 days you are pretty much golden and you can sell the property. There's a larger pool of buyers to buy a house versus an apartment complex. Also, it's easier to diversify and buy in different states, markets, etc.
But we saw a lot of drawbacks to scaling a single-family investment portfolio, and they were enough to send us running to the multifamily space.
Number one, economies of scale, right? So Usually when you have larger properties, you spend less per item that you're renovating or maintaining because you're usually buying in bulk, versus single family where you have one thing, it costs a little bit more to maintain and you don't have that discount for getting and buying in bulk. Number 2, location. Usually you can't buy just 10, 20, 30 plus single families in one location, so you're gonna spend a lot of time, gas, and mileage on your cars traveling from property to property. And lastly, vacancies are a lot more scary in single family than in multifamily.
Horror story time. We had a rental in North Carolina, but things took a turn for the worse.
We found a tenant. The tenant was paying, for probably like a whole year, and then he started ghosting us, and this wasn't normal for the resident. So I sent for a wellness check for him. We sent a cop out there to knock on the door, see if anyone's home. The police officer said that they never heard from him. So we then decided to start the eviction process. Once we took possession of the property, we realized that he had just abandoned the property, but he absolutely destroyed it. And he had not paid rent 2 months. It took us another 2 more months to legally evict him, although he wasn't even at the property anymore. He had left on his own. So we had to come out of pocket on all of the expenses and the mortgage for about 4 to 5 months on that property. We then had to go in and renovate and decided to just sell it. We obviously made a profit on it since we bought it at such a good price, but that can happen in worse situations where you don't make a profit or you just can't get the tenant out depending on what the county laws are, and you're stuck making that payment.
For the real estate investors out there who say it takes just as much work to do a single family deal as it does a multifamily deal, we would have to disagree.
Multifamily takes more capital, so it's more capital intensive to close these deals. It takes longer, usually 90 plus days, and you have to be a little bit more sophisticated in running numbers, markets, because there's more capital, meaning that there's either more profit to be made or more money to be lost if you don't do it correctly.
But at the end of the day, what matters most is what Rich Dad Poor Dad author Robert Kiyosaki has been screaming from the rooftops for over 25 years. And that's the argument that cash flow is the most important factor in real estate. Here's why.
What cash flow is once you've paid your expenses, your debt on the property, you have the remaining amount of income that goes into your pocket as profit. With more units or a larger multifamily, you have more expenses, but also more revenue, which therefore gives you more cash flow.
At the end of our back and forth conversation, we came to an agreement with single family flippin' dude.
Depending on an investor's risk tolerance, experience, and access to capital, this will determine the path that will be best suited for them to be investing in, whether that's single family or multifamily.
And single family flippin' dude turned out to be none other than my twin brother Jeffrey.